Hey, my name is Jack Warner. This video we're going to be covering how to invest in treasury bonds. So some people this might not be an investment type that they want to get involved with because it might be too conservative and it might not bring enough return for them. But for some people, treasury bonds can be a great way to diversify your own portfolio. So if you're totally invested in stocks, you might want to consider treasury bonds to kind of balance out the risk versus reward and the risk versus conservative investment type. So treasury bonds are an excellent conservative investment. If you're wanting something that's not as risky as stocks, but earns more than just a savings or a money market or a CD, then treasury bonds is your go-to investment choice. So investment treasury graded bonds are found at treasurydirect.gov, which is an official US government website. And you'll see it called Treasury securities. And when you see the word security, just think it's a vehicle for investment, like an asset, like stocks and bonds, like gold and silver, like treasury bills, treasury notes, anything like that. Treasury securities are considered some of the most conservative and safest investments an individual can make. So not just conservative, and it's not usually we link conservative with you're not earning enough money, but treasury securities can return a decent amount of money back to the investor. But they're considered the safest because they have the full faith and credit to be paid back by the US government. And through the history of Treasury Direct securities, the government has never defaulted, which means they've always paid back bondholders of government securities. So they've never defaulted on bonds at all. So that comes to the conclusion that if the one day that they might do that, hopefully not, that means the economy has collapsed. The US government is no longer. An investor could buy them from the direct market from this site up here. You can go to treasurydirect.gov. You can buy them from the direct market, or you can buy them from other bondholders on secondary markets like banks. There's some brokers out there, collectors, stuff like that. So there's different types. There's different types of treasury securities that you need to be aware of, and some of these might fit into your strategy, some of them might not, some of them you might just want to know more information about. You can always go to treasury.gov to find the latest information and tax implications and such connected to these types of securities. So the first one's a treasury bill, and these are short-term assets, so they sell from 4 to 52-week intervals, so not long-term at all, very short-term. Treasury bills, they're auctioned off on the public auction on the government website at a discount rate. So say there's a $100 treasury bill, that's the face value or the par value. You'll hear par or face value. Sometimes it means the same thing. And say it's a $100 face value treasury bill, they'll auction it off, say at $10. So you can buy it from anywhere from $10 to $20 at the discount rate, and then when you hold it through maturity, they'll get up to that face value. So the difference will be the interest that you earn. So you'll get paid interest during the long term, or it's not long term at all, but during the duration of you holding the T-bill, but you will get paid the full amount, the face value, when it does mature. So I buy a treasury bill for 52-week treasury bill at $30 and the face value is at $100. If I hold it through maturity, then I get a $70 difference there. So that's a good profit. Treasury notes, it's usually not that high though. Treasury notes, medium term. So this is the difference between all these here. T notes, medium term assets, that they mature from 2 to 10 years. So there's like 2-year ones, 5-year, 10-year T note maturity dates. You'll know what you're buying whenever you're on the market. Interest is paid on notes twice a year or semi-annually. Sometimes it's called that on the treasury.gov website, treasurydirect.gov website. So they'll pay interest twice a year. You can choose a $100 face value, and that will stay the same. So when it does mature, you're getting $100 back plus all the interest payments that you got. So that's how you earn money there. T bonds are long terms, and they can range from 10 to 30 years of maturity dates. So if you don't know what maturity dates means, that just means when that security expires. So it'll no longer pay after that. Similar to T notes, bonds are issued at $100 face value, and they pay at interest semi-annually. And you can buy more of these too. Of course, it's not just you're just buying one $100 one. You can buy $100,000 worth of these. And they'll pay interest rates semi-annually as well. And interest rates are typically higher on these bonds. Plus, they can accumulate longer because it's 10 to 30 years. Then you have your floating rate notes, which are also short term, similar to T-bills. Your floating rate notes, short term assets that mature in 2 years. So anything from 1 to 2 years or just a couple weeks, like a 4-week interval to 2 years, is considered short term investment. And these FRNs they have a variable interest rate. So it'll change depending on what's going on in the economy. So right now they probably are going up as interest rates are going up here in October of 2022. And they pay interest 4 times a year. So it's a unique one because most of these don't pay that much, but these pay interest rates 4 times a year. And then your last one is a newer one to the Treasury securities, and that's Treasury inflation protected securities, or TIPS. And they're issued at 5, 10, or 30-year maturity dates. Interest rate is fixed, and it does pay semi-annual. But a good thing about TIPS is whenever the maturity date comes, they'll pay you the difference. So either if you got a discount, or if the value, just say the value decreases of the TIPS over time, they'll pay you the difference to the face value to make sure that adjusted to inflation too. So not just if it's $100 TIPS and it ends up being $100 10 years from now, they'll pay you the adjusted rate of inflation. So it could be 9 to 15% depending on how much inflation had occurred over that time frame. And there you can break these down too. There's a lot of different savings bonds, different savings rates, and graded bonds too. Notes and bills, but bonds especially you can break these down even further, like savings bonds, EE, and all the different types of those kind of series. And those will have different ones. This is just a general overview of the main categories of the types of securities that the Treasury Department offers. So you can buy them direct from Treasury Direct on auction, and they'll hold different types. They'll hold different times for the different bonds. And some assets like savings bonds, some of the ones that I said you could break down, like the different series of savings bonds, you can just purchase directly. Like on Amazon, you can just purchase directly. The same thing with here. You can just buy them directly without having to go to auction. Investors can also buy Treasury securities indirectly through private secondary markets, like banks or other financial institutions that are certified brokers. Banks and security brokers can offer auctions or direct purchase of these securities. So it can be wise for some people to buy them because you can buy them at a discount and you become indirect owners of that bond. So you can find some good deals sometimes in the secondary market. Like people, just like with homes, people are trying to liquidate something. Then they might need to lower the price just to cash out because they need to use that cash to pay something in their real life. So it's good to check the secondary market sometimes because you can probably find a better deal in the secondary market than you can on the direct market. It's all about how much you want to invest in time and stuff, though, and research. And this is just a screenshot I took just today of the different notes that they were offering, different T-bills of upcoming auctions. So these are Treasury bills that they're offering here. And you can see the amount that they're offering and different announcement dates and auction dates and etc. Anyway, so Treasury securities are, again, a great way to invest some money that you don't want to put in savings because it's just not earning enough in savings accounts. It's extra money, especially if you're getting close to that retirement age, that you want to put money away that's going to be a little more secure. It can give you a passive amount of income over time, and some of it can be inflation protected, and it'll earn a higher rate than your savings, so it can give you a decent livable income during that time of retirement. Or if you're just risk adverse, Treasury bonds are the way to go. It can help you build that conservative portfolio, balance out any money that you have invested in the stock market, and that way you can feel a little safer when you sleep at night.